A very good afternoon, everybody, and welcome to this webinar on the future of sustainable resource governance. Good morning to those who join us from the Americas, and good evening to those who participate from Asia. My name is Fritz Brucker. I'm the co-director of NADEL, the Center for Development and Cooperation at ETH Zurich, the Swiss Federal Institute of Technology. It's my pleasure to welcome you also in the name of NRGI, the Natural Resource Governance Institute, and my colleagues who did all the great work to make this webinar happen, Felicitas Fischer, Margarita Battle, and Catalina Müller. NRGI and NADEL do host this webinar together. We also have jointly organized the advanced course on the policy and practice of natural resource governance for experts from the extractive sector. In fact, today's public webinar is also the closing event of this intense course that took place over the last 5 months online. We decided to open up this closing event because we are at the critical juncture when it comes to resource governance. The global pandemic sent prices for oil, gas, and minerals to a critically low levels and poverty rates to new heights. Extractive companies hold back investments, and the transition to a low-carbon future requires resource-dependent economies to make difficult decisions. The risk that governance standards fall by the wayside in these difficult times and achievements in accountability and transparency will be rolled back is real. And we want to discuss these topics with experts from 2 stakeholder groups that both play an important role in resource governance, but to date rarely work together. On one hand, these are investors who tend to take a bird's eye view to spot opportunities and risks for capital. And through this, they also influence the direction that the extractive sector is taking. And on the other side, civil society, who takes a close look at how investments affect development and political dynamics on the ground. Before we move into the discussion of these topics, I want to take the opportunity to welcome Jürg Vollenweider from the Swiss State Secretariat for Economic Affairs, SECO, for a few words of welcome. SECO is partnering with us on this course and is for a long time supporting sustainable resource governance initiatives at multilateral and national level through its Economic Cooperation Program. Jürg, the virtual floor is yours.
Thank you very much, Fritz, for giving me the opportunity to address briefly the audience and in particular course participants. This is much appreciated. So SECO, as I said, supports this course by financing scholarships for participants. We did this because we believe that natural resource governance is a core issue in many countries, including developing countries. Although the extractive sector in many of these countries substantially contributes to state income, this potential does often not translate into better public services or general welfare. We are therefore convinced that this course, under the knowledgeable guidance of ETH and NRGI, provided participants with tools and practical experience to work on these issues in their home countries. So, dear participants, I would like to congratulate you on successfully participating in this course. This, unfortunately, was the easy part. Now comes the part where you need to apply what you have learned in the real world. For this endeavor, I wish you courage, persistence, and a bit of luck. And for everyone else, I hope you will enjoy this seminar. Thank you.
Thank you so much, Jürg. And of course, I very much support your congratulating words to our participants. Thank you also for supporting this event and make the participation for many participants possible. Yeah, so then let's move on to the heart of the debate, which is why you have all joined this webinar. We have structured it in a way that we will have first 40-45 minutes of panel discussion, followed by a 30 minutes session of Q&A. You can write your questions to the panelists and comments at any time into the Q&A function of the Zoom interface, and we will then address them as we start the Q&A session. For the moderation of the discussion, I will hand over to Andrew Howell. He will moderate it. Andrew has large experience on investment in emerging markets. He's an investment analyst with 20 years of experience. And since 2019, Andrew works for the Emerging Markets Investor Alliance and has now more also kind of a industry perspective on the topic at hand. Thank you very much, Andrew, for moderating this panel. The floor is yours.
Well, thank you very much, Fritz. And maybe I'll ask my fellow panelists, Adriano, Emily, and Paul, to turn on your videos, if you don't mind, because I think we will kick off I will introduce you, so let people see your faces as I do that. It's really great to be here on this panel to close out your course, and I'm very grateful to ETH and NRGI for the chance to moderate this very interesting topic today. I've seen a list of the participants of this course, and it's very impressive folks here, so I'm looking forward to your questions as well. So the topic is the future of sustainable natural resource governance in a post-COVID-19 world and the role of investors and civil society. Now, we have representatives here on the panel from both that investor perspective and the civil society or NGO perspective to try to touch on this. So first, let me just introduce who our speakers are here before we kick off their remarks. We have Adriano Nuvunga. He's a scholar, leading civil society activist in Mozambique and founder of the Center for Democracy and Development. He's also a former director of the CID Center for Public Integrity. All you need to do is Google Adriano's name and see that he's at the center of a number of very important debates in Mozambique around civil society and resource governance. So really looking forward to his comments. Next, we have Emily Greenspan, who's with Oxfam. She's the Associate Director of Oxfam America's Extractive Industries team, an expert on community engagement with respect to the extractive industries. And a particular focus, and this is something I've had her on a panel in the past to talk about indigenous people's rights, free, prior, and informed consent, or FPIC, and these are things we hope she will speak about. And finally, we have Paul Bugala. He's a sustainable investment analyst focusing on resource governance, on human rights, and on environment responsibility. He's worked as an investor at Calvert Investments, which has been really one of the pioneers in responsible investing. He's also worked at Oxfam together with Emily. So my name is Andrew Howell. As Fritz mentioned, I'm a former equity research analyst. I was with Citibank, now focusing on sustainability and ESG with the Emerging Markets Investors Alliance, which is an NGO in New York. The plan here is for the panelists to introduce themselves and share some, I guess, their high-level thoughts on this topic today about resource governance and really where it's headed. What are some of the issues given the challenges of the pandemic, and what civil society investors can do about it, both independently and perhaps working together. So we're going to have a bit of an open discussion after those initial remarks, and then we will open up to your questions. So as Fritz said, feel free to just put questions that you have into the Q&A panel. And as we kick off, maybe I'll just take the privilege here of making a few of my own comments. You know, this is more from the investors angle, because the Emerging Market Investors Alliance, that's really what we do. We bring investors together with companies, with governments, and also with policy experts to try to look at these sustainability issues, or ESG, which, just to be sure you know about that term, that's environmental, social, and governance factors. That's kind of a shorthand for expressing all of those non-financial factors. So they fall outside what you put in a financial model, but they're still very important to a company or a country's outlook. And that's something that's becoming more and more clearly understood nowadays. And I think that the investor perspective I'd like to communicate is actually a fairly positive one on this topic. And that's to say that I think that investors are more able to influence outcomes now in a positive way than has been true in the past. And there are a number of trends which I think make investors more likely to take actions to promote better governance from government and corporates that they're investing in, and also to potentially punish those investments which engage in poor governance. And I would like to highlight just 5 factors underway that I think are supporting this trend. The first just has to do with the business of fund management. The fact is that sustainable investment funds are seeing inflows. That asset management, part of the asset management world that focuses on ESG and responsible investing is growing. And actually in emerging markets, which what I look at, ESG funds have done much better than non-ESG funds over the last 3 years. The responsible investing world has grown by 50% in terms of assets, and the rest of the industry is essentially not grown at all. It's been flat. So that's fund flows. The second point is regulation, which I'm sure you're all familiar with and may have talked about in your course. There's a lot happening right now on the regulatory front. We have the EU taxonomy in Europe, which has really been a leader. But I think there is a lot more coming to other markets. In the US is a case in point, which is where I'm sitting, where we have seen a change in administration, of course. And I think there's a lot of interesting developments we could see in terms of regulation. And I hope that maybe Paul can touch on some of that. The third point is about investors who I think are taking a more activist approach to highlighting shortcomings in governance and other aspects of sustainability. We just have seen a number of cases recently where shareholders have said enough is enough. The case in my mind at the moment is that of Rio Tinto in Australia, where you had essentially a very bad mistake was made and some indigenous ruins were blown up in an excavation, which was a very avoidable incident. And as a result of that, shareholders said this is unacceptable behavior. In fact, the CEO, was essentially forced to resign a few months after that. I think that's something really would not have happened in the past. We have good examples of more involved shareholders than used to be the case. I think that's good news. The fourth point is on financial instruments, which are expanding to encourage responsible behavior. The green bond market we hear about, that's growing by leaps and bounds. And there are other parallel financial instruments which are becoming available. We have nature bonds, social development bonds, a lot of green finance, which essentially provides incentives towards more responsible investment and rewards for that. And I guess the final point is that there is evidence that ESG-friendly companies and governments actually are better investments. They trade better, meaning they're less volatile. So risk-adjusted return profile looks better. They tend to trade on better valuations. And I think that the entire investment community, even those that don't fit into kind of classic ESG funds, are increasingly focused on these factors. And that's something we call ESG integration in the industry. So the result of all of that is investors, I think, are pushing for better performance from companies and governments on non-financial factors. And those companies and governments are more responsive to those demands than they used to be. I think at the center of a lot of these discussions is climate and climate policy, given the importance of that issue. But I think other issues and resource governance is very much part of those discussions as well in those conversations. So that's my opening remark, I guess, trying to put a bit of optimism in what is obviously a challenging environment, which I'm sure we'll be hearing about. And let me now just hand over to Adriano. Adriano, please introduce yourself. Maybe just give us your preliminary remarks on this issue of resource governance and the outlook, and particularly what you're seeing in Mozambique and what are the priorities from your perspective. Please go ahead, Adriano. And you're muted, sir. Go ahead. I think you're unmuted. Please speak.
Thank you. Thank you.
There you are.
Thank you very much for the opportunity to be part of this important webinar. My name is Adriano Nuvunga. I'm the Executive Director of the Center for Democracy and Development here in Mozambique, as I've said. Previously, Director of CAP, Center for Public Integrity, Mozambique's TI here in Mozambique. Well, I'll make a few remarks about Mozambique. And to start with, regardless of the exceptional energy market circumstances which are created by the COVID-19 pandemic, Mozambique is projected to become a major global gas market over the next decade, with more than 30 million tons per annum of LNG coming soon, which is equal to Nigeria and Algeria. The discoveries are of high quality, about 125 TCF of certified non-associated gas in Mozambique. So this is really a world-class gas reserve. But what seems clear, however, is that after much of initial excitement from company, government, expectations now slowly being moderated. And the reason is not only because of the low gas price, but also the fact that LNG developments are seriously being impacted by a 3-year long military insurgency, which has led Total to cut operations in the beginning of 2021. And Mozambique is now being known by a faceless insurgency that is putting in jeopardy about $30 billion investment, which is the biggest ever on this continent that I'm speaking from now, Africa. But it's not only because of the military insurgency that the LNG prosperity is being threatened. Bad and poor governance is also hindering the Mozambican people from harnessing the potential of their world-class gas reserves in northern Mozambique. In fact, Mozambique is today being portrayed as good gas, as I have indicated, but bad governance. So this mix of good gas, 125 TCF of good gas, but in a context of poor and bad governance. So while the resource-rich countries with bad governance end up in Dutch disease or resource curse, in the case of Mozambique, it is sinking in what we call resource curse, which is a curse even before production started. So from the Dutch, we have learned about the Dutch disease, but Mozambique is teaching the world that a curse before production started is possible. What that means? Well, I've indicated that Mozambique is facing a faceless insurgency, and that is an important indicator. This insurgency is precisely there in northern Cabo Delgado, where Mozambique has its world-class gas reserve. But more importantly, when it comes to the indicator of this resource curse, is the $2 billion debt contracted against future revenues of the gas money. So the outgoing Gebuza government in 2014, before they left office, because they wanted to be part of the wealth that would come after they left office, they went borrowing illegally against future gas revenue. And as a result, donors have cut aid. And with the donors cutting aid, which accounted for about half of public expenditure at the time, Mozambique is sinking in an unsustainable public debt, growing internal debt, and the debt to GDP ratio is more than 100%. And Fitch Ratings rated Mozambique as CCC, meaning that Mozambique cannot go to the international financial markets to finance itself. More importantly, and related to the gas process, is that the international oil companies that are operating in northern Mozambique, including Mozambique's own NOC, National Oil Company, they cannot access to international markets for project financing. And in those cases where they can have that money is too costly, so money is very expensive. And that means that Mozambique will have a smaller government take due to the decision taken by an outgoing government. So this, in our understanding, is a resource case. So it's a case even before production started. The argument I'm making is that though Mozambique has a world-class gas reserves, bad decisions, bad governance is leading to Mozambique failing its people from harnessing of that world-class gas reserves. Civil society is doing a lot of work, but that is not effective. However, we have been pushing for transparency here in Mozambique. And you, I will understand that from a party that is a former liberation movement turned into government and then controlled the politics of transition to remain in power, then become a predominant party, in fact, mean that the spheres of politics, of business and society, they are all captured by a very small elite. And that means that fighting corruption is not only difficult, but is life-threatening as it is entrenched, it is promoted, and it feeds the system. So the agenda of contract transparency, including that of transparency of beneficial ownership in the framework of the ITI, it has really been important. But we have failed to complete that process because of the insurgency now. So Mozambique has, with the civic-driven sort of agenda, been pushing for good reforms, but all these were interrupted because Mozambique now is busy fighting the insurgency. So the whole good governance reforms, although difficult, because those who benefit from the poor and bad governance are the very same ones who are expected to lead the reforms. Considerable improvements were being made with Mozambique adhering to the ITI in 2009, becoming compliant, and systematically will be improving, but that was interrupted due to the war that I've talked about earlier. The Equator principles, they're important instruments, as they give civil society not only the information and the tools, but more importantly, they bring civil society into a platform where they can engage investors, because the Equator principles, they demand that civil society, they are also consulted in that process. And civil society has been documenting information on the politically exposed people and their interests. And by feeding that process, it gives some leverage to the civil society. But where we are today in terms of Mozambique, in terms of harnessing of its world-class gas reserves, it wouldn't have been possible if a Swiss bank, Credit Suisse, did not facilitate the $2 billion odious debt. In fact, Credit Suisse has facilitated that with its high-level employees from the London office, undermining all the due diligence internal processes to give these loans, which resulted in the money not coming to Mozambique, but the money going to shipyard companies in France and elsewhere, and Mozambique only receiving small part of the goods, arguably for the tuna fleet, which are rotting there in Maputo because they are useless boats. But that is because Credit Suisse high-level employees, they were in collusion with local elites here in Maputo to go borrowing against illegal, against future revenues. And these local elites here, they have substantially benefited of that scandal, which ruined the country and pushed millions of Mozambicans into poverty. About 300 millions, they were used in kickbacks for local politicians here, including the son of the former president. All the people from the intelligence people, they were involved, and now they are prisoned here in Maputo, but the process of taking them to court is slow. So what I'm saying is that the global architecture of financing these projects, most of the time they can be ill-intentioned, and it can lead into the countries from the global south to go bankrupt, as is the case now of Mozambique. And this, it has resulted in human rights defenders in Mozambique suffering. I mean, as human rights defenders, we have seen situations of colleagues being killed, of colleagues being shot, of colleagues being taken by the death squads, which are linked to the state machinery as a way of silencing those who are pushing for the good governance, particularly are pushing for the Credit Suisse case to be taken to court, as that would result in the local elites here who have benefited from this also to be taken to court. So my key message to the participants of this webinar is that, my dear friends, to have the resources, gas, minerals, it's important, it's a blessing, but that it can be easily taken into a situation of chaos or even resource chaos by few people who want to benefit before time. You know, gas, it takes time to develop, investments are to be made. People are not patient enough, not only to set things right in terms of governance, but also to wait for the benefits to be for all. They want to take that even before time, and in so doing, they end up pushing the entire nation into a resource scarce and preventing millions from harnessing of their resources. And if we look at development as a human right, we can clearly say that the resource in northern Mozambique of human rights, and not only the global north, the global architecture, particularly Credit Suisse, have to be held accountable, but the elites here have to be held accountable, because that resources, it needs to be taken out, but in a way that it benefits all, not a very small group of people. And this is a story of Mozambique, but it is a story of most of the African nations, where unfortunately bad and poor governance have pushed wealthy nations into poverty. I stop here and I thank you much.
Adriano, thank you very much. And I think resource curse is something, a term you hear about, you can learn about. in the classroom, but what you've told us is a very vivid portrayal of resource curse in action. And I'd like both of the other panelists to kind of share their thoughts as well of about that issue and really what can be done about it. Maybe I'll turn to Paul here and bring you in. And Paul, I would ask you first to introduce yourself and just talk about how you come to these issues. But also, you know, I'd love to hear your thoughts on the situation that Adriano has referred to. This is the famous tuna fleet scandal in Mozambique, but I guess more broadly, you know, what can investors do to play a role in heading off these types of activities? Because this was a loss, you know, obviously for the people of Mozambique. This is money which was ended up outside the country. But also, you know, this is a loss for investors when this type of thing happens, and what ability do they have to, you know, essentially prevent this before it happens?
Yeah, absolutely. And thank you very much, Andrew. Thank you, Fritz and Jörg and Fustas, Catalina, and NADEL and NRGI for this opportunity. And absolutely, Andrew, Adriano made a lot of really salient points to investors in the context of understanding not only does the resource curse lead to a breakdown in the social contract between the governed and their government when their government is, their interests are more aligned with the companies that are operating in the country and the financial community that's financing those projects than the interests of their own citizens. But all of that has a lot of salience to investors as well. And investors and members of civil society have important similarities and shared interests in general that are different from their industry and policymakers. Investors and civil society members often plan with longer time horizons in mind than a company would that might be concerned with the next quarter's results. And investors in civil society are often seeking information from industry and policymakers to help them make decisions about their livelihoods and their ecosystems in a way that's very different than the way investors would do this. And Adriano mentioned EITI. I was part of the multi-stakeholder group that tried to implement EITI in the United States, and as an investor sat in the civil society group in that MSG instead of in the industry group where the investor usually sits on the EITI international board, to reflect the fact that it's I think more appropriate reflection of the shared interest between investors and in civil society. But one of the key points I want to pull out of what Adriano mentioned was the shared interest in government take between civil society and investors. And I have an excellent colleague who also works with the Emerging Markets Investor Institute, Alexander Shea, who did a study that I put in the chat about the usefulness of government take in securities analysis that basically took the data that's now available because the EITI type disclosures, these royalty and tax payment disclosures that are made through the EITI are now required on a mandatory basis through the EU and through places like Canada and Norway. In fact, 28 countries in total. And there are $1 trillion in project level payments out there that NRGI has cataloged very helpfully on their resourceprojects.org website that are immensely useful, not only in securities analysis, as Alexander Shea's research points out. There's a significant portion of the operating cash flow of a company is represented by government take. That is, you know, the amount of money that the government is requiring payment for the operations of a project. And also, as Adriano mentioned, that is also the income into that country. That is the financial benefit that the country, sees for giving up its birthright, but giving up its natural resources. And so there's obviously a shared interest in understanding exactly what that amount of money is, and consequently how it's spent. And that brings us to the great value both to civil society investors of Extractive's payment transparency, and the fact that we've seen really a groundswell of support and progress in that area from 2002 when EITI started to the point now where it's implemented in 54 countries around the world, and to the point now where those disclosures are viewed as so important to investors and policymakers that they're required disclosures of companies registered on exchanges around the world. And I think this is just one example of how data and how access to information through things like these types of disclosures, but through ESG disclosures in general, are creating pathways for civil society investors to understand their common ground. In both cases, I think we live in a world where it's very important for us to understand what costs industry has externalized, because civil society is bearing those costs, both in terms of a lack of access to financial resources to fund development, as Adriano mentioned, but also in the breakdown of good governance and of the respect for human rights that he referenced as well. And then on the investor side, understanding externalities that are exposed through ESG disclosures helps an investor make a decision about whether one company is a good bet, over another, to make it plain, and to understand on a long-term basis, whether the decisions of management are in the best interest of investors or if they're, serving some other purpose. And so I think what's interesting too, and what I'll close on is the point that Fritz made earlier about the fact that COVID and the fall of commodities prices has led to increased poverty and to a lot of challenges for the extractive sector overall, but there are indications now that we may be entering another commodities super cycle. And super cycle basically is when commodities prices increase on a steady base over a course of several years. And the last one probably started around 1996 or 1997, maybe peaked around 2008 when the price of oil was around $140 and is likely to have crested, in 2020. But with the possibility of growth after the pandemic, looser monetary and fiscal policies, a weak US dollar, stronger inflation, you see indications of another super cycle starting. And that has implications for the economic viability of the resources in countries around the world. But it also means that now might be the time in a lot of cases to strike while the iron's hot and try to achieve a lot of the governance objectives that we share in general, while our policymakers are more inclined to listen to folks outside the industry, because commodities prices happen to be lower and less money happens to be funding their campaigns. So I think I'd leave that with a point about COVID and the fact that we're in a really interesting point in terms of commodities prices that may indicate that now is the time to push hardest for governance reforms before we reach another super cycle. Thank you all very much.
Yeah, thank you, Paul. That's a great point about this commodity outlook, and I think there's a lot of differing opinions about where we're headed for commodity prices, but there's another angle, of course, which is the energy transition, which implies a huge change in the types of commodities which the world is going to need. And so there's, our view essentially is we're looking at a very differentiated outlook for different commodities, and certain energy commodities could potentially, see a lot less demand. Of course, thermal coal is the biggest example of that. But then you have a potential for a huge squeeze in certain commodities such as copper and nickel, which are very important to the energy transition. Other things and battery minerals we hear about, such as cobalt and lithium, which could potentially be under massive demand and create windfalls potentially for producers of that, but also huge environmental impacts which need to be addressed as well. So there's a lot of very, I think, big changes coming for the commodity world that have a lot of implications for these types of topics we're discussing. So thank you. And now, turning to Emily. And again, Emily, I would say, please, introduce yourself and your work, but also, would love to get your thoughts on, turning back to COVID-19 and kind of what is that meaning for some of communities around the world in resource countries where there's obviously got to be a lot of challenges and negative impacts that are coming from the environment that we're in right now.
Great, thanks, Andrew, and thanks very much to the panel organizers for this opportunity. I'm the Associate Director for Oxfam's Extractive Industries Program, and I co-lead that team with a particular focus on Latin America and Asia. A lot of my work in the past has focused on community rights issues, as Andrew mentioned, and particularly looking at issues around community consultation, free prior informed consent, with an aim to strengthen corporate policies, international financial institution policies, and also national legislation on these issues. And more broadly, for those of you not familiar with Oxfam, our mission is to end the injustice of poverty. And as a result, combating inequality is really central to our programming. And as we've heard in Adriano's really telling story, Extractives brings to the fore numerous inequalities, questions around who has access to critical information and resources, who benefits from these projects, and who experiences the impacts most profoundly. And slicing across, rural and urban differences, gender, and other various indicators. And what we've really found is that COVID has highlighted and amplified these inequalities. So we see countries like Peru, which is the country that's benefited from many years of natural resource extraction, but really failed to invest these revenues into healthcare systems, and as a result has been one of the most profoundly affected during COVID, having hospitals completely full and inaccessible just even in recent weeks, and community members living in more isolated areas near mine sites, not having access to ventilators or health services even at all in some cases. That's something we've seen more broadly as well, this challenge of, who has access to healthcare, countries like Zambia and others, where, we see copper development, huge amounts of revenues, and then those that live near the mine sites have not one ventilator to access. And my colleague, Makupo, who's on this course, wrote an excellent blog on that just last week. So I'd recommend that for those that haven't yet seen it. And I would say another thing we've been observing is that women are hit particularly hard. So we're doing some work looking at, specifically looking at gender rights issues around extractives in Zambia and the Dominican Republic. And since COVID, we've seen a surge in unpaid care work among women in mining communities, and also loss of livelihoods that women have been even more profoundly impacted than men in these mining communities. So we work more broadly at Oxfam, we work in around 30 countries in Asia, Latin America, and Africa. And traditionally, we've been really focused on the issues of community rights in the environment, fiscal justice, some of these issues that Adriano and Paul have already hit on transparency, accountability, tax justice, and gender justice. And then we've just gone through a process of renewing our strategic plan, which is going to be launched shortly. And those core focus will remain, but we also have seen that there's really a need to increase our work at the nexus of climate justice and extractives, in part getting at some of these issues that you raised, Andrew, with the critical minerals and what the surge that we see coming down the pike right now for lithium, cobalt, and other minerals in order to fuel the just energy transition. and also to address the issues of closing civic space and threats to human rights defenders. And I think, Adriano has given us a really key example in Mozambique, but we're seeing this across all of our programming. In every region where we work, and in most of the countries where we work, we've been seeing this as a rising issue and a rising threat even before COVID. And now we're seeing it even more exacerbated in recent months, and hope to get a chance to talk more about that later. I would just say more generally, as we've said, with COVID and the economic crisis, there's this risk that it's really going to increase pressure to extract more minerals. Governments are seeing this as sort of an economic, or trying to frame it as an economic imperative to go more into extractives. And I think in that context, natural resource governance issues are going to be even more critical, and CSOs really are going to have to continue to play a strong watchdog role to avoid backsliding on policies and commitments by government. We're seeing that happening already during COVID regarding social environmental protections and also fiscal incentives that are put in place to attract companies given the economic crisis. We're going to have to continue to have these conversations about whether governments are getting their fair share out of the deals, and looking at the tax systems that are put in place. I think Paul's point is a really good one about, is now the right time, as some of these mineral prices are low, to really start examining those tax systems. And this is something that DRC has been doing, which looks to be pretty effective so far, taking advantage of this moment, recognizing that the demand for cobalt is not going anywhere. So maybe now's a good time to make sure that we're getting our fair share out of those minerals. And also promoting broader dialogue about government investment decisions to ensure that that revenues are being invested to combat inequality, investments in essential services, and also in economic diversification. So if we know that petroleum prices are going down, we need to start thinking now, and especially revenue dependent countries. So in our program, for example, East Timor, Nigeria, how can we think about alternatives to petroleum and start thinking about ensuring that the revenues that we're making from petroleum already are invested well in diversifying the economy? And then finally, in this really important issue of combating shrinking civic space and protecting human rights defenders. So maybe I'll leave it there for now.
Thank you so much, Emily. So that's a lot of great points about the challenges that are being faced and some of the solutions that may be out there. And I'd like to talk a little bit more now about solutions. And maybe let's go back to Mozambique and Adriano, and here you've, I think, presented what is quite a challenging picture that's being faced, and particularly you as a human rights defender are facing some challenges yourself. I wonder if you could share some thoughts about potential solutions from your perspective, frameworks maybe to think about how governance of this potential windfall of natural gas resources for Mozambique could be governed in a way that you think would achieve a better outcome for the people. And particularly, I'm curious of your thoughts of this question of investors working together with civil society to promote that better outcome. If you have any thoughts, how can investors maybe be involved in this solution? I mean, you've talked about essentially now that the markets are making it tougher for Mozambique because you're essentially losing access to capital markets because of some of the issues that have happened. But how can investors potentially play a positive catalyst role in improving the outcomes? Would love to have your thoughts on that.
Thank you very much, Chair, for that. One, I would like to say that we are running a little late. As I've indicated in my previous session, we were engaged in reforms for transparency, but accountability is always a challenge in a context where there is a predominant political party which moved from being a liberation movement into controlling the process of democratization. And then the issue of the war in Cabo Delgado, which is partly linked to what I have alluded to as poor and bad governance. Let me elaborate a bit on that. I mean, the area we're talking about, Cabo Delgado, though is home for Mozambique's world-class gas reserve, it is one of the most impoverished. 2 hours of flight from Maputo, and decentralization is not appreciated here. The government is highly centralized, and very little goes to the provinces, including this region. So with this happening, it makes it challenging. With that considered, and having said that we are running a little late, I would like also to mention that some of the investors, they do show concern, not only with environment, but with the issues of good governance. But overall, I haven't seen the right behavior from the investors when it comes to Mozambique. Most of the investors, they tended to be with politically exposed people. They tended to be linked to politically exposed people, and that is problematic. That is problematic. At the moment, we are shifting from engaging investors only here in Mozambique, but also to start to engage them in their home of origin. So for instance, engaging Total in France and Paris, engaging ExxonMobil in the United States, Anadarko, so start to engage them and to show that the investment here in Mozambique is resulting in violation of human rights, is resulting in undermining the climate change agenda, as politicians are interested in that, because corruption at the moment, though, for instance, the United States, you have the Dodd-Frank that was expected to be an instrumental tool to avoid bad behavior from US companies, but you still have bad behavior here in Mozambique. So, and with all this happening, the civil society is working, is pushing, but investors, they are less available. And this, it will, I think it will harm not only Mozambique, but the investors themselves. Mozambique will not be able to check out the whole that resource because of the climate change agenda. This would mean that investors and all people interested in the right governance of, they should come together and see how to go about Mozambique's world-class gas reserve, respecting the climate agenda, which will, as I have said, impact, if not the first or the second, but the third wave of investments for the oil and gas in Mozambique. It will be seriously affected by the climate agenda, and that would need an appropriate platform to appreciate the role that civil society is playing, which at the moment is not really appreciated enough. And next to this, we are working on the voluntary principles for security and human rights for Cabo Delgado specifically. Yesterday, I think I might have shared with you, we just had a webinar with some colleagues from the Secretariat of the Voluntary Principles here. And the whole idea is to say we need a platform of dialogue here, where investors, they can come together, international oil companies, government, and the security sector of those international oil companies. They can come together to say, listen, Cabo Delgado should not be the next Iraq. It is not about tanks, about militarization, but it's about allowing for development to trickle down, to keep people happy by participating in the process, and that will create the social license to operate and then generate development that people need. Because it is only development that will do two things. One is to keep local people happy and will reduce the grievances that lead to the hostilities in northern Mozambique, but also, and importantly, it will improve the livelihoods of the people in the country. And only people with improved livelihoods, they will start to appreciate in the right manner the role of investors in a country.
Thank you very much, Adriano. And I certainly hope you're right that that is the direction things will take. It's a bit discouraging to hear your perspective that investors have not really been particularly supportive of the work that you've seen, at least in Mozambique. But I'm curious about your point. You mentioned Dodd-Frank and this idea that U.S. Investors were maybe expected to be encouraged, more encouraged from some regulations here in the U.S. To be involved in a positive way in their international investment activities, and that maybe hasn't really played out that way. I'd be curious to hear Paul's perspective on this. Of course, Paul, you've been involved in some of the regulatory activities coming out of Dodd-Frank, and also probably have a good perspective on how the regulations may be evolving here in the U.S. to support support of good governance. So please share your thoughts on that.
Well, thanks, Andrew, and thank you, Adriano. One of the things that struck me from what Adriano said is that it sounds like CDD is doing a lot of investors' work for them. And as far as your effort to reach out to investors and contextualize the environment that they're operating in is, something, and I know Oxfam does this as well with its corporate engagement work, is something that a good analyst should be trying to do anyway. And I think a broader trend here is that the financial flows that Andrew mentioned before are moving more towards passive indexed, instruments that, that's led to a decrease in the number of analysts and less analyst time to do the kind of in-depth research that's required to, unmask and gather the kind of information that Adriano was mentioning, which is going to our broader point, another example of how important it is that civil society investors find each other and work hard together to pursue our shared objectives. But yeah, particularly on Dodd-Frank, I was also really struck in what Adriano said about the importance of exposed people, politically exposed people within Mozambique and their role in investment decisions there. And it reminds me that the United States has enhanced its beneficial ownership disclosure requirements, but still has some grounded makeup in terms of making those public and available to investors and other stakeholders in a way that would make them truly powerful. But also, and just leading up to the Dodd-Frank point as well, Adriano mentioned the degree to which communities that are producing natural gas in Mozambique are those that are receiving the least benefit. And I think in particular, contract disclosure is another opportunity in the EITI context to help us uncover exactly what the benefits of individual projects are and the degree to which those should be benefiting the communities in which they operate. And just getting around to the Dodd-Frank point, I think what we saw with Dodd-Frank is the United States falling far short of the leadership role that it took way back in 2010, and including an EITI type disclosure requirement in the Dodd-Frank legislation. I think the new administration in the United States is committed to addressing the gaps in that. But I know there will be headwinds in that because the American Petroleum Institute and companies like Exxon and Chevron are really committed to make sure that that disclosure is as limited as possible. And that's something that is consistent in US regulation. It seems like if industry isn't involved in writing regulation, then they find a way to marginalize it through litigation or other means. And so, so as to say that I think the United States and investors will join the global community in making this data available, but there's still a need to make another push there. And then I think there are other areas based on my experience and what it sounds like the situation in Mozambique is, where broader reforms around beneficial ownership, around contract disclosure, also need to be implemented as broadly as possible so that people have the information they need to hold their governments accountable and make sure that while their resources are available, they're contributing to benefit to development and to the advancement of human rights.
Thank you very much, Paul. And I would now note that the Q&A portion has now begun. So we have a little over 20 minutes left for our discussion. So time has already flown by. But I see we have some questions starting to come through in the queue. So thanks to all of you. Please continue to put questions in. Maybe I'll start with one that's here from Selena. So thank you, Selena, for that question, which is how relevant are governance and transparency standards for big investors, really? And then also a question about investors in civil society. I actually want to touch on the first one of part of that, and then I'm going to go to Emily for the second part. But how relevant are the transparency standards for big investors? I mean, again, going back to my initial remarks, I think becoming more and more important, partially because there is now increasingly a fiduciary duty that investors have to seek out best practice on transparency and governance from their companies. I mean, you could say that that's always been really part of your job as an investor, is to find the better governed companies, and you're generally rewarded for doing that. And if you are investing in a company where governance is either low quality or unreliable, or there's some malfeasance going on, some non-alignment of interests, you suffer as an investor when that happens. So I think that is part of that is already part of kind of your job as an investor, but increasingly really seeking out kind of a higher goal for best practice is becoming more understood as part of the investor's job. And there, I would say the buy side, so the institutional investment infrastructure has really evolved quite a lot, where you now have essentially ESG or sustainability investment teams, which are part of every major fund manager now, and playing a much more vocal role in making sure that the investment decision makers, so the portfolio managers, are taking into consideration issues over governance and transparency. And that's, I think, something which is making progress and has made a lot of progress in real time. So that's kind of what I'd say to that. But yeah, I mean, I'm curious, Emily, what you would say to this second question about making investors in civil society better allies. I mean, you're a member of civil society, but you have worked with investors quite a lot over the years. To that question, how can those two groups kind of work better together, and what could be potential benefits of seeing that happen on the ground?
Yeah, that's a great question. And I think it is something that we have had in mind for a while and have been engaging with investors, but I think we can even do more. And I think maybe another role that we've been exploring as Oxfam that we can sort of give investors the information they need is really doing some more quantitative research about impact. So for example, a case, I think Andrew, that we're working on as Oxfam right now in Guatemala, where it's a really interesting mining project. It's a silver mine. So the company itself is a Canadian mine and has been really arguing that this is sort of very important mine for being a critical mineral for the energy transition, that this is going to, you know, provide a value add to the climate. And that's sort of the message they've been sharing with investors. At the same time, Oxfam works really closely with local communities on the ground, and we're aware that there's been huge amount of opposition to this project for a number of years. And in fact, the company that was initially there basically went under because the government had informed the company that, you know, all of the relevant land rights had been respected, that the communities that inhabited the area were not in fact indigenous communities. So in this case, international human rights law did not apply, and that they could go on ahead and build the mine. They built the huge silver mine. And then what ended up happening is that the community sued, and it went all the way up to the highest court in Guatemala. And the court found, no, these communities are indigenous, and you've failed to respect their right to free, prior, informed consent. And you need to suspend all project operations after the mine's already been built and operating, mind you. So the company's, you know, it's a huge loss to the company. And this is since 2017, the mine has been suspended. And we're now several years out, and the consultation is still ongoing. And I think, you know, some investors have very reasonably been really frustrated about this, because from their perspective, in terms of ESG, the government's saying land rights are secure, go on ahead, there's no indigenous peoples here. But the reality is there's a huge gap between both sort of, I think part of it is just understanding how international human rights law applies in the particular cases. And then the other part is just not having those connections on the ground. So I think that's where the really important role for Oxfam to play. And we're starting to think about how can we really do, you know, document this type of case and quantify it in a way that investors really see how much money can be lost. We know there's a little bit of research already out there that Shift Project has done in the past with Harvard, looking at the potential risk of losing $20 million per day from mining companies when these projects are halted. But I think there's more work that as civil society we can do to really, I mean, obviously on the one hand, make those connections and show the emblematic cases, and then also document and quantify what this impact really has directly for investors and why it matters for their bottom line.
Thank you, Emily. That's very interesting research you mentioned, and definitely shows the importance of dealing with some of these incidents before they actually happen. Another question here from Alonso, maybe which would be a good one for Adriano to address, which is, you know, back to COVID-19 and the impact that is having on the investment priorities of resource-rich countries. So essentially, the pressures from COVID-19 force countries to seek investment from sources they may not have sought from it before. I mean, the classic case of that is going to China for financing that it's without maybe the same needs for transparency. Do you have any thoughts on kind of how the strategies of countries may be changing in the current environment when looking for financing?
Thank you very much. This is a very interesting question. I have expected that with COVID-19, countries such as Mozambique would start to challenge investors to invest in technology, but also to challenge investors for improved transparency. I think we will come out of this COVID-19 shock with a demand for transparency, but I would have expected that to come from resource-rich countries, including Mozambique, which is unfortunately not happening. With that said, I see two trends here. One is apparently because of COVID-19, from Western markets, there is surplus of cash to be invested. That's what I have seen recently. And with that happening, we will see investors rushing to put their money, and that will undermine good governance. The second trend that I see is more the Chinese angle, where with the ongoing crisis, and most of the countries, Mozambique included, that has no cash to pay its basic running costs, they will quickly go to China to get easy money against the future revenues. In fact, Mozambique's 309 million from IMF last year from the rapid credit facility. If you look at the countries that IMF gave money last year for COVID-19, they are all resource-rich countries, meaning that in one way or the other, they are tied to the next, to the upcoming revenues. So we will see more countries moving into resource scarce because of the scarcity of domestic funding mechanisms, and they will go to China. And the linked to the Chinese sort of investment is that compared to the Western, while we can complain, we can engage Credit Suisse, but the information is out there available, and you can engage Western banks in the courts at their countries of origin. But when it comes to China, you have no information whatsoever. And starting from how much is owed until now, here in Mozambique, we do not know how much Mozambique owes to China. I'm not talking about the official, but including commercial. That is not known. And when that is not known, it means that we're in a serious problem. And that will again mean that the future revenues are going to be syndicated to a credit that we have no clue how much, what was the purpose, and the nature of that. So I think COVID-19 has put us in a terrible situation, and the expectation that we had that resource-rich countries would push for transparency in engaging international oil companies, for instance. We don't see that. And this means that we will come out of this crisis with a deepened domestic crisis.
Thank you, Adriano. I'm curious, Paul, if you agree with that. So essentially, do you see that we're moving not towards greater transparency, but away from greater transparency? As well as, do you see kind of some shifts in the funding mix for resource countries? I'm curious, to what degree you would agree with that perspective from Adriano. Yeah, please go ahead.
Yeah, I mean, I would tend to agree, and Adriano has just gave an excellent illustration of the extent to which when there's just a lot of cash on the sidelines, it has been for investors more broadly, but that for a long time, Chinese investors have had sought out countries like Mozambique to meet their resource needs, and can do so without the restrictions of that are in place in countries like the United States in terms of transparency. But even with that said, it's going to be years until the disclosures required by Dodd-Frank are available to investors, and we're able to do the kind of forensic analysis of budgets that Adriano mentions. And so I think the likelihood, again, of an increase, and you made a very good point earlier, Andrew, about it being maybe not looking, the next super cycle not looking like the previous one. The need for us to be smart about making sure that during this down phase that Emily mentioned before, that we are looking at the way that royalty and tax rates are set, the ensuring that government take is consistent from country to country within particular regions, and that those funds are benefiting the communities where projects are going on, contributes not only to the stability of those projects and the likelihood that they will not be affected by fiscal changes in the future, but also that they're funding sustainable development in a way that's transparent and accountable. And I think too, this all goes back to the point about building those relationships between investors and civil society. And I want to just go back to the challenge in doing that and point out one, I'm going to put this into the chat, one group that I think civil society would be do well to familiarize themselves with is the UN Principles for Responsible Investment, has a set of working groups on ESG issues that is a good forum to, if you haven't gotten to the point where Adriano is in his access to, investors in Europe and companies operating in Mozambique, a good way to start conversations about what is going on within individual countries and the investors that are operating there is to look at UNPRI working groups that include areas like governance and tax reform, but also things like climate change and water and indigenous people's rights, and seek out the companies that are operating in your country, investors are operating in your country, and reach out to them to share your perspective on the impacts that development is having.
Yeah, thank you, Paul. And yeah, so I'm sure our panelists, many of them know about the UNPRI, so Principles for Responsible Investment, which is really one of the key responsible shareholder organizations out there, and they're doing a lot to facilitate engagement on these issues right now. Emily, a slightly different version of the past question, which is more on how the COVID has changed the way that companies are engaging with communities. You've kind of touched on that a little bit already, but I'd love to hear a bit more from you. If you look at free, prior, informed consent, so maybe what would be the gold standard for community engagement, does COVID make FPIC harder right now? Or could you argue that the challenges produced by the pandemic make it so much more important to have the communities on board that actually in some ways it makes it easier path now to community consent right now for foreign investors?
Yeah, I think it's definitely challenging on a practical level. Maybe just taking a step back from FPIC specifically, just sort of to frame it. I think overall we're seeing a real tension and difficulty and rollbacks of environmental and social safeguards. So this is getting back to the larger issue of governments seeing now suffering from economic crisis and really trying to justify an imperative for pushing extractives forward. If folks haven't seen it, there was just a study released by Forest Peoples Program just a week or two ago, and it was really striking, their findings. They looked at 5 countries with large expanses of tropical forest, so the Amazon as well as DRC and Indonesia, and they really found that across the board safeguards have been rolled back since COVID. And for example, Brazil passed 195 executive acts to weaken environmental laws between March and May of 2020, as compared to 16 during the same period in 2019. Colombia weakened their consultation guidelines in September 2020 through a presidential decree. In Peru, the Ministry of Energy and Mines sought to dub oil and coal as strategic platforms to promote economic recovery. And both Colombia and Peru have begun implementing online consultation processes, which are not consistent with FPIC principles. Obviously, we know that communities that are affected by these projects are often in extremely remote areas where they do not have reliable online access. There's also questions about, who is invited to these sessions, who is able to participate in terms of the timing. And we mentioned, I think I mentioned earlier, the increased burden on women, the increased care burden on women, and their ability to engage in these types of online dialogues, given the other crises of COVID. So I think that we're seeing, it's quite dramatic, what we're seeing right now during COVID, and worrisome. At the same time, I think, Andrew, totally agree with your point about FPIC being even more important than ever. And I think, investors have a real interest in knowing that too. And the Guatemala case I mentioned is a good example, but, there's others. We saw a project, Anglo Gold Ashanti project in Colombia a year or two ago that was halted as a result of community opposition. And isn't it so much more important, even now, to find out very early on whether communities support this project or not? If they have the ability to stop the project, to impede the project, I think it's really in the interest of governments and investors to create that space to do extensive consultation very early on. And from Oxfam's point of view, we really think that even before companies are involved, this is a question of doing effective land use planning, engaging communities before even it's decided that there will be a mining concession or an oil concession, to figure out what is their vision for development, and to do that in a strategic and a coordinated way. We're also seeing often, we'll see mining concessions that are overlapping with areas that are really important agriculture areas, and that land use planning work hasn't been done at the outset. And even now, where we're seeing, a huge amount of pressure on food systems, it's even more important to do that due diligence. So yeah, I do think that FPIC is more important than ever in these contexts, but I think there's also a really urgent role for civil society right now, playing that watchdog a role as the situation gets much more challenging around economic circumstances in many of these countries.
Yeah, thank you very much. So we're nearly out of time. I'm told I'm supposed to stop 5 minutes before the end for wrap up, but I may steal a few of those minutes because we have some very interesting questions that have just come through here at the end. One is on challenges facing the lithium mining sector in the Andean countries, and I'll just comment on that briefly because I've done some work on it, and I think it's a very interesting topic. The Chilean mining company SQM is one of the leaders, of course, in lithium production. Albemarle, Canadian company, is also involved in the northern Chilean basin there, and the fact is there's a huge number of challenges. You've mentioned governance challenges, but of course the environmental and community impacts of lithium mining are very significant. What is interesting is that there is a lot of work being done to try to address these issues, being driven by the consumers. So this actually, the German automakers, Daimler and Volkswagen, are supporting a very large project by GIZ, which is the German Development Bank, to do some studies in that region on really what are some of the impacts of these activities, and to engage with both the mining companies and the communities, as well as the government, to ensure that lithium, which is not evenly distributed in the earth, there's just a few countries where you have the majority of that supply, can be produced in a responsible way, given huge need for more lithium and under almost any battery chemistry outlook you would have. So that's an interesting point. I just would mention on that. We have one more question I want to mention, and maybe we'll close on that. I think I'm going to ask Adriano to give his thoughts, but Adriano, I have to ask you to do this in just a couple minutes if you can, which is the question here from Emmanuel on kind of the question of social norms with respect to corruption. It's a huge topic, so it's probably hard for you to answer this quickly, but are there, is this something which the private sector and civil society is kind of looking into, how social ties, pressures of family and friends, these types of issues affect corruption in a country, and is it something worth looking at more closely? And I guess we'll have to end with that one if you have any thoughts on that question.
Oh, quite in the opposite. The extractive nature of Mozambique's economy, meaning the investors in more closer ties with politically exposed people, they can easily extract from the really primary sort of structure of Mozambique's economy, be it mineral, gas, and so on and so forth. And they tend not to care about what the social fabric of society is about. And that allows for an order where illicit financial flows allow for investors to easily transfer their profits, and they don't care about the rampant corruption which is the game in town. So they are part of that problem.
Understood. Thank you. So that's very interesting perspective. This is not a social norm issue. This is an economics issue more than anything else. You know, there's so much more we could talk about here, but I've been told we're out of time. So I would thank all of our panelists for what's been a phenomenal discussion, and hand things back over to Fritz to close.
Yeah, thank you very much, Andrew, for your great moderation of the panel and the discussion. And thanks also from my side, from our side, as the organizers, to the panelists, to Emily, to Adriano and Paul for sharing your insights and for exploring kind of the space between civil society and investors. We all took a lot of kind of inspiration out from that. And I just want to make kind of very subjective 3 points that I take out of this discussion. I'm sure each of us takes other points, and there's much more to say. So it's not kind of a summary or anything like that. But one point that struck me is about the relation between investors and civil society. It was mentioned several times that there is a joint interest. And it was actually even mentioned that civil society is doing some of the job of investors who cut down their analyst staff, which raises for me also serious questions about how is this different work funded, who is taking which risks and which rewards. I think we have to strive for a new balance in this partnership or sharing labor, division of labor between the two. The other is about risks. We see all this ESG movement coming up. But at the same time, the trend that we see a reshuffling of the funding mix, which might actually work towards greater transparency and rather diminished transparency. So we have these both opposing trends that we have to observe how that will play out. And the last point I'd like to mention, or I take with me, is we come out of a kind of a boost cycle, and we probably approach a next super cycle, commodity super cycle, which will change dynamics because the prices will go up, and that might create a new opportunity. So that's kind of just from my side, a couple of thoughts I'll take with me. I'm sure all of you will take other new, fresh perspectives. And with that, I would like to thank you again, Andrew, Emily, Paul and Adriano, for your participation in the panel. Thanks for all the participants in the webinar, and thanks to the team for making all of that happen. With that, I wish you a good day, afternoon or evening, and a great weekend ahead. Thank you and goodbye.